Good morning, folks, and welcome back to Almus Market Mornings. Markets have broadly been in a holding pattern with the dollar index strengthening by around 0.5%. Rupee remained rangy, but traded near its weakest levels against the dollar. Gold has seen a bit of correction, but in commodities, copper has seen a big rally after Grasberg mine in Indonesia, which is the second largest source of copper, had to declare force majeure. Good morning, JK. Some strength being seen in dollar globally. US equities have also not made any further headway. What's your read on the current set of moves?
Good morning, Swaraj. So the dollar, I think dollar um, rise, or I can say recovery, is purely technical. So no major fundamental news. Although Powell's guarded statement on Tuesday was also some sort of a minor trigger for the market. But if you look at the you know charts, every time dollar is made to try to go into a new low, it has bounced strongly. And the latest move also confirms that we have been seeing a higher closes, although we made even a new low at 96.30 in the recent move after Fed meeting. I think the closes have been steadily on a higher close. So technically the closing rates make some sort of a significance for the market watcher. So there is some sort of a short covering that we are seeing in the dollar. That is why some strength is seen. Of course, there were a couple of triggers, minor triggers, I would say, because the business sentiment, as per EFO survey in the Europe, in Germany, actually has deteriorated. It fell by about 2.2 points in September. And the outlook on both the manufacturing and services actually deteriorated. Their expectations have also clouded noticeably. So this is happening after successive months of rising sentiment. Perhaps the trade deal between US and Europe could be one reason why this has been happening. And also perhaps the ECB is also close to its rate cutting cycle, so that could be one. The other news was a big jump of 20.5% in the new home sales in US. That is a 3.5-year high. So that caught the market by quite a surprise. Although housing data is not a big mover of markets, but this is also significant. It was explained away by slightly lower mortgage rates. Yes, it is lower compared to the highs, but it's still on the overall picture. It is on the higher side because Fed is not cutting rates in a very aggressive manner. But it's been explained away by expectations that rate will cut further. There have been some incentives from builders, and also the government apparently, according to Treasury Secretary, the administration is looking to tackle the high housing costs with some measures. So there can be some package that is coming up for the housing sector as well. Of course, on the focus is also the GDP estimate, second estimate that will be announced today, expected at 3.3%, which is quite high compared to many other regions in the G7. So overall, market seems a bit short of dollars. So that's why we are seeing this bounce in the dollar. Not to say that any of the underlying reason for the dollar's multi-month fall is reversed at all. One interesting thing, of course, although stock market did see a correction as well, again weighed down by huge long positions. An interesting thing is that for the second time, the U.S. government is taking a stake in a U.S. Listed company. This is the Lithium Americas company, where they're seeking to take up about a 10% stake, and this is happening after Intel. And this seems to be a new trend that is emerging. Kind of, I don't know whether to call it as a government support for railing companies, or it is their picking up at some value companies from the administration. So that is something that we need to wait and see. So the stock market overall was down, but I think this is a news that is worth watching out. Another market that made notice was the oil prices that climbed more than 2% to a 7-week high. Now, this was triggered by weekly US crude oil inventories that fell quite a bit, by a surprise 607,000 barrels. Market was expecting actually, additional 235 barrels in the inventory. So there's a big difference between market expectation and the actual number. So that led to, the oil prices moving up also. On the rupee, while the rupee traded close to 88.80, but it was still quite, steady at those levels. It started off, or rather, carried on the negative sentiment from day before yesterday when it broke the 88.50 mark and went to 88.80. And sentiment was quite negative. Market was long, and that is an ideal setting for the central bank to act effectively. So reports suggest that central bank likely intervened across segments like NDF offshore, currency futures, as well as the OTC spot market. So we never traded above 88.80 in whole of yesterday, although it never went below 88.70 as well. But it seems to be providing some sort of a stability in the rupee, at least for now. And of course, the recent surge in the demand was also pinned down to surge in imports of gold and silver. But that can be, dying down soon also, because of gold and silver prices actually retreating from their recent highs. Now, on the fundamental side for India, India has assured the US that Washington remains a key partner in energy security. So, Commerce Minister actually said that government is aiming to expand trade in energy products with the US over the coming years. So it's an area where they look to work together. Perhaps some sort of a hint that trade negotiations are at least making some progress, or at least the two sides are making some sort of a give and take, started to make some give and take. So it's too early to call it a major development, but I think the effort is definitely on, and market may be looking at that, because the single most factor that has kept the rupee you know going on underperforming relative to its peers is the trade and the tariff issue. And therefore any hint of positive development in this is likely to see the rupee gain quite a bit. So it's also significant that whole of yesterday the dollar was steadily gaining, particularly against the euro and the major currencies, also some of the Asian currencies. But the rupee remained very steady. So that's also another sign of stability. So we'll wait and see whether that sustains. And of course, in this, the central bank's role will be very important. Thank you.
Thank you, JK. And just quickly summarizing, dollar did see a bit of short covering yesterday. Remains within the range, but we are seeing that pressure build up for a rally in dollar. It was also aided by the fact that in Germany, the IFO business sentiment, which is an important data, that deteriorated. The outlook on manufacturing and services was not that good. New home sales in US hit 3-year high due to lower mortgage rates as compared to a few years ago. Today's data would be focused on US GDP second estimate. It's expected at 3.3%, which is quite high as compared to other G7 countries. Oil prices have climbed more than 2% to its 7-week high. This is due to the US inventory falling significantly more than what the market is expecting. And rupee's negative sentiment continued yesterday, but due to the central bank intervention, we did not see a break of 88.80 in yesterday's trading. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates on the financial markets.